You are looking at our swing machine, the swing machine for intraday. As you can see, most of the intervals are set at 233 ticks. That is 233 transactions. It could be 100, could be one contract, could be 100 contracts, could be 1,000, but we set it at transactions. And even on Priceline, Netflix, some of our stocks, we have it set at 161 ticks. It's a very, very close view. But let me show you something else. This is the swing machine. Also, this is now set for a daily, weekly, monthly view. This is the Russell. This is the date and time the swing machine would have gone along, up 6,000 on a daily, on a weekly 23,000, monthly 51,000, one contract. Here's the ES. This is the date and date time, 20,000, 43,000, 89,000 on a monthly. Here's the NQ, date, time that it went along. This is our mainstay strategy. This is how we monitor our trades and our positions. It's also how we hedge and wedge against positions. But back to our intraday. Intraday is misunderstood by a lot of folks, and I want to explain that perspective is everything. And what do I mean by that? The intraday is set at such a small level that it is like being on the football field. It's like being a referee on the field of play, on the field. And just like a referee on the field, it's not possible to see with such a close resolution everything else that's going on in the field. So that's why we can trade almost from here purely, but we choose not to. We also have what we call our intraday charts that back us up a little bit, and just a little, and they bring us from being on the field with the intraday swing machine to maybe being on the coach's bench, if you will, or the coach's sideline. So we get more of a flavor of the game. And we can sometimes wave off a signal or two from the intraday swing machine, seeing what we see on an intraday chart. If we want to trade on a daily basis or a little bit longer, we have to back ourselves up a little bit more. And that's where we'll use the swing machine on a daily basis. And the charts that we'll use, they'll still be mostly price charts, but we got to back it up. We got to maybe get up off of the field and be sitting at the 50-yard line, maybe 10, 20 rows back, so we can see a little bit more of the action. And if we want to play even further or greater, maybe we got to go back up to the first tier in the stadium. And then if we want to even take a bigger view, we got to be up, in the press box so we can see everything that's going on. Folks, that's much like, when I'm trying to describe that kind of resolution, it depends upon how you want to approach your trading. And so many people misunderstand that point. And I'm thinking back to last week. I had two, I don't know if they're new or not. They seemed it. Sometimes you don't know what you don't know. Some people are very respectful and some are very rude. I'll give you for instance. I tweeted out a position that we're looking at, and by the way, we don't recommend anyone to buy or sell anything, especially on the Twitter sphere. We're only putting out examples of our signals to demonstrate to people that you can learn to trade these markets. Unfortunately for this gentleman, he doesn't know what he doesn't know. He was very nasty. He was kind of rude, and basically said, "You shouldn't be doing that. The S&P just went up 9 points. You don't know what you're talking about." That type of attitude. He wasn't talking. He was tweeting, and I found it, very very telling. We're getting a lot of new people in, and they open up an E-Trade account or they open up this account and they learn about something, and then they get on the Twitter sphere, and all of a sudden they're pro. It's a very low threshold bar to come into this game. It's a very high threshold bar to be around doing this, 10, 15, 20 years. And, with this gentleman, and I use that word generously, didn't understand. He had no clue. He doesn't even know. I say he doesn't know what he doesn't know. He doesn't even know the resolution of the trade. He doesn't know the structure of the trade. He doesn't know the time frame of the trade. He was just looking at the here and the now. That on Friday the market was running up and it was up 9 points past somebody. But other than that, he has no idea. The other thing that he doesn't understand is, this game can be a very humbling game. It's not about being right or wrong. I could care less. When we trade with such frequency. We've done it so much. I'd say it's like, brushing our teeth, but honestly, I only brush my teeth twice a day. It's twice a day. So, you know, trading is more frequent to us than brushing our teeth. So you got to appreciate, that resolution. And to draw another comparison, but in a more positive vein, there was a young lady, and I also made a comment about a position that we're entertaining, just in general, a short position on Goog. And she came back and she was relatively polite and just said, "Well, I'm looking at the Bollinger Band on the 30 minute." And I'm like, okay. What the common mistake that new traders make is that, again, that resolution. They don't they don't understand. They'll start something, they'll get the E-Trade account, they'll be looking at the candles, someone will tell them something about this or that, about a Bollinger Band. And in a up market, or a moving average, in a market that just goes up day after day, it seems and appears, and it's kind of it fools them that it works every single time. So they start to say, well, if I can do that on a daily, I can drop this down to a 30 minute or a 15 minute or a 1 hour time frame, and I can do this. Um, Now she was polite and we exchanged back and forth. But what she also didn't know, she didn't know the structure of our trade. She didn't know the resolution at which we were um, making that trade. And when I say the structure too, just about all of our stock trades, index trades are positioned. They're structured so that we can pretty much define our risk. When we're trading intraday, that risk is defined by the automation, by the equipment that we use itself. But what she didn't know was that we were actually looking at this trade. Now, it may or may not work on Goog, but we were looking at a Bollinger Band on the monthly, not a 30 minute. And what younger novice don't know, what they don't understand is that the larger time frames have much, much more meaning than a Bollinger Band, especially on Goog, on a 30 minute. Now, she may have got in and made 200-300 bucks. I don't know, and I don't care. Over the long term, I think that if you're trading like that, especially something that has a huge spread, probably not going to do that great. At least that's what our back testing and everything tells us. Whereas if we're correct on our trade on a monthly basis, we could be in that trade for a good length of time, and it could pay many multiples of thousands of dollars. So I just remind everyone, we're not a broker, we're not making specific recommendations to buy or sell anything. We're very respectful of the people we follow on Twitter. We just ask everyone, to be respectful of us. We're out here doing this to teach people. Um, if you want to get in a piss and match with somebody or whatever, go do it with somebody else. I saved this gentleman's tweet because I'm going to use it as an example probably in another few days, and then I'll block him simply. Because I don't, it's not that I don't, I could care less, but I don't want the people that are following me to even waste 5 seconds on reading a response that someone had to me that isn't, doesn't know whether to wind their ass or scratch their watch. And to the person that exchanged respectfully, maybe she'll learn something and realize, and that's half the battle, is realizing what you don't know. That's where learning really begins. Most people most never get there. They don't know what they don't know, and they're not prepared to make the commitment, the time commitment, the investment to learn. But that's what we're about, folks. Just a friendly reminder as we get ready for next week. Good luck, everybody.